welcome to the Commercial Property Investor podcast. Thanks for joining us. Really appreciate you spending a few minutes with us this morning. Can you maybe just give us a bit of an introduction to what you're doing right now? What's your typical day?
Well, yeah, Jerry, thanks for having me on. It's a great pleasure to be here. Yeah, do I have a typical day? They all seem to be pretty much different at the moment, but if I was to put my finger on it, I'm busy looking for redundant commercial property in our town centres with a view to repurposing or converting into other uses. So we're primarily spending my time speaking to agents, canvassing derelict properties, establishing a network of like-minded buyers and developers in my area, just to see if we can get some pipeline deals through over the coming months.
Brilliant. So that is right up my street. That's exactly the sort of thing I like to do. Do you find those buildings for others, or do you try and develop them out yourselves? What's the kind of structure that you use for that?
Well, because we've got a commercial agency arm as well, they do tie in nicely together, because the deals we're turning up at the moment, not all of them are going to be appropriate for what we want or within our skill set necessarily, or the deal structure might not be right. So we've got the capability through Tandem Real Estate to pass those on to other investors who are active in our area. So yeah, we're doing that as part of our daily tasks as well, just establishing that network of investors and developers in and around the home counties and the M25 at the moment as well.
Great. Sounds like a great structure. And I was going to ask you about your geographical spread. So is that basically that's your patch inside the M25?
Yes, we did flirt with the idea of going up to the sort of northwest, where you can seems like you can buy a whole town for what a house I'm afraid in central London costs, but due to the constraints and end use values and such like, we decided to stay closer to home. My business partner is based in Hertfordshire, north of London, so he covers probably from Buckinghamshire and Essex upwards, and I'm in Godalming, which is south of London. So I do Berkshire downwards, all around Kent and Hampshire and Surrey and such like. So yeah, those are generally the sort of, what people class as the stockbroker belts, where, values are high enough to support conversion generally.
How are you finding competition in that area? I mean, it's a big area between you.
Well, it seems like the whole world and its wife now thinks it's a good strategy, doesn't it? Yeah. Do you know what? There's enough real estate around the place for everybody to have a go at it, isn't there?
Yeah.
And a bit of friendly competition is no bad thing as well. It sharpens the skills and the senses. So
for sure. And you've actually got a really quite interesting background, Andrew, because you started off with surveying, didn't you? How did you get to this point? What's been kind of the journey?
Yeah, so I had quite a sort of traditional route into the business, and it's still a fairly well-trodden path. I started out as a graduate surveyor in the mid-90s, working at a retail consultancy, which was called Cherston Hurd. And we were, I'd say, probably one of the biggest, if not the best, commercial retail consultancy in the UK at that time. And I was doing lettings of shops primarily in central London. I was acting for retailers, buying trading space for them. The claim to fame I've got it is that I acquired 4 of the first coffee shops for Starbucks in the UK.
Well done.
Yeah, thank you. At the time, were called Seattle Coffee Company. Before they were
of course, yeah.
So I stayed there a few years, moved on to the commercial headquarters at Stratton Parker. Doing some retailer work, doing some more landlord work. I was getting more involved in the investment side then. They had a really strong department buying and selling really big shopping centres up and down up and down the UK, and I was sort of shadowing the main partner in that department, just providing occupational advice and design advice and on the ground advice for their big pension fund clients and developer clients when they were trying to buy and sell big retail shopping centres. And then I moved over, so I did that for about 10 years, and then I moved to the capital value side where I currently am at the moment. So that is buying and selling high street investments for a wide range of pension funds, property companies, high net worth individuals. It's pretty much a brokerage role, really. So that's
brilliant. So effectively now you've got two, as you mentioned earlier on. You said, yeah, we've kind of got an agency, but actually that's a pretty big part. There's quite a lot of moving parts there, isn't there? And you've got, by the sounds of it, some really large clients looking for your assistance in the retail sector. Is that fair to say?
Yeah, I guess. I mean, part of the reason for setting up Tandem Real Estate was because retail brokerage was getting very difficult. Our pension fund clients were putting themselves back from the sector. Probably it was noticeable about 4, 5, 6 years ago. So our bread and butter work of buying and selling retail parades, trying to do deals in the sort of £5 to £20 million category through pension funds, that was becoming extremely difficult to do. They were turning their eye to other sectors like hotels, industrial offices, wide range of alternative uses. So we set up Tandem Real Estate so we can give ourselves a bigger spread of deals to do, and also to let ourselves have the time to do some development work on our own account. So which is how we're splitting the week effectively between the commercial brokerage and development side.
That's quite interesting. I need to ask you a question because I've been talking about agents, and that sometimes they can absolutely be the best friend you can ever have, and then other times they just don't want to be your friend at all. Through the agency side, would you actually take on a client who's looking for a specific property and actually find them a property, maybe even develop it for them, and they get a yield? Is that something that you do?
I suppose we could now in our current iteration with Tandem and our development arm. Most of our clients are historically have been pretty sophisticated developers and pension funds. So our core business has been buying the completed asset for pension funds. So that is a shop or a parade of shops which are up and let and up and running and income producing. But we talk to various developers and investors. We look for a brief, find out who's genuinely buying. A lot will say they are, but when push comes to shove, they're actually not. And then we sort of, we have a list of requirements, and in our daily duties, we speak to other agents and see if we can dig up those deals.
Yeah, and do you tend to work that? Again, this is me just asking because of previous chats, but do you tend to work on a commission basis, on a project by project basis, when you're, what's the typical sort of setup for somebody that's looking to employ somebody to go and find buildings because they maybe haven't got the time or they haven't got the contacts in the network? Because trying to get into that network is quite challenging sometimes, especially if you're new. So a lot of our listeners are relatively new to commercial, and they're trying to find properties. They're trying to understand how the market works and that whole sector network with agents. What is sometimes employing an agent to actually go and find a building for them one of the better strategies? What's your thoughts on that?
Yeah, but it can be. There tends not to be so many retained agents in the investments sphere, whereas an agent will get a sole mandate to go and look for investment property. That does happen in the occupational side, where certain commercial agents get retained by Starbucks or whatever it might be to go out and to go out and find a lot of sites for them.
Yeah.
In the investment sector, it's more typical for an investor to speak to either the whole commercial agency market or have a select group of whatever it might be, 5 that they trust. Then just make sure that that agent is busy trying to source you properties, in which case you pay them a fee. And you don't have to then pay for hourly work or a monthly retainer as you go along. So it can work well. You don't have to pay until you get a deal done.
Yeah, that's the key one. Yeah. And like you say, it's trying to find out who's motivated and actually doing it, and who is not necessarily doing the activity because they've maybe got their plate full with other things. Yeah. And it can work both ways, can't it? They're actually not really looking, and sometimes the investor, as you say, is not really buying.
Yeah. Well, I mean, the commercial agent's only got a certain amount of hours in the day. And they have a target to hit. So all the time they are working out whether rightly or wrongly, whether if they engage with you, that they will, do a deal and meet their fee target. So
yeah,
it is sometimes difficult to engage with a commercial agent, but if they're busy, as you say, they've got other things which they which they need to be doing to servicing existing clients. But I suppose what I would say is, as for new investors, you want to sort of engage with the commercial agent at the right level. There's probably no point in phoning up one of the bigger partners at one of the bigger agencies, because you'll just because they'll be dealing with the big pension funds.
yeah,
so you want to find one who's probably on the early part of his journey, a bit younger, maybe at a small consultancy where their overheads are a bit lower, so they don't have to chase the big deals, and then just get a network of a handful of those those that will return your calls, the ones you like speaking to. That's trial and error, really, isn't it?
yeah, yeah.
But pick your agent correctly. Make sure that they're engaged and will be excited to have your business.
Yeah, and they want to grow. Yeah, I think it's when you have somebody who's very well established that it's challenging to actually get noticed. Whereas somebody's wanting to grow their business or their practice, then that's a good fit.
But also the younger agents, in my experience, are typically very very hungry. They're on the phones a lot more. They're networking a lot more. Small deals mean a lot to them because they're just starting out. What you don't necessarily get is the cutting edge advice from a new start commercial agent, because they don't have the experience of being in the market for 20 years and knowing all the pitfalls. But as long as you take that on board, you're quite likely to get a good deal flow from the young agents, because they're very, very hungry and very active.
Yeah, great advice. Thanks, Andrew. So I wanted to drill down a little bit into retail, if I may. And there's lots of moving parts here. There's permitted development, of course, which is specific to England. There's retail changing as a sector. And then, of course, as we just mentioned there, are we talking about shopping centres? Or are we talking about perhaps more the high street in a secondary location? So I'm predominantly talking more about the secondary locations, or at least the stuff that private investors as opposed to institutional investors are going to get into. But what's your current advice, thinking on retail and where the opportunities are? Because obviously the sector's struggling, but ultimately at the end of the day, where there's struggle and strife, there's opportunity, isn't there? So what's your thoughts on retail right now?
Well, this is the big question, isn't it? Where's retail going to go over the coming months?
Yeah, where's your crystal ball? Yeah. But at the end of the day, it doesn't have to remain retail, does it? It could potentially become something else, because at the end of the day, we're dealing with space, aren't we?
Indeed, yeah. And it's always a good idea to have a second option with a property when you buy it. They call having multiple exits. With retail at the moment, to answer your question, it's tending to be tarred with the same brush. So the whole sector is got a dark cloud hanging over it. And what that means, apart from supermarkets, I would say, the whole of the retail sector, the prices have tracked backwards quite considerably. So, within all the mess, there is going to be quite a few gems as well. Now, the bet somebody has to take is whether the market's going to return and prices are going to increase in value again, which, looking back at past, looking back at cycles, you suspect it might, even with the big cloud hanging over it at the moment. But just to give you a case in point, I bought for I won't say the fund or the town, but I bought for a pension fund 5 or 6 years ago a property in a quite well-known town southwest of London. It was let to 2 good tenants. They paid at the time for it, I think it's about £5 million, and that gave them a yield of about 5%. They've just sold it for, I think, about 2 and a bit million quid. So it's gone down 60%. It was a 10% yield. Now, that 10% yield obviously reflects a lot of risk. That's why the yield is so high. The high yield reflects the fact there's uncertainty. But if you really drill down into an individual asset, you might actually be able to get through that risk. You might find that the tenant isn't in danger of going bust. You might find out that they're there to stay there for the long term. And if you've got a good covenant as a tenant, then you've got security going forward. So just I would look through all the headlines and see that there are good deals to be done, even if it doesn't mean repurposing or asset managing retail. There's good income producing property.
100%, yeah. Having looking at headlines in the Sunday Times or something about the retail sector is not going to tell you what's happening in your local market or what's happening with the department store down the road, because they're all very different, aren't they? And just a question: the two key tenants that were in that property, are they still there and paying their rent?
They're still there, yeah, paying their rent.
So the only thing that's changed is market sentiment, and the yield is shifted to 10%. Wow.
Yeah. Now, in commercial property, yields bounce up and down far quicker than they do in residential, and it's not beyond the wit of man to think that if people start seeing retail as a socially acceptable word again in the next few years, that and there's a herd mentality amongst sophisticated investors. As soon as they see their compatriots going back into the sector, then they typically will pile in. So those prices can rebound as quick as they move out.
And just for perhaps more the part of retail that certainly I would look at is maybe some of the smaller units, or at least larger units becoming smaller units. Do you think in this subsector there's some changes going on there in terms of people shopping local or other types of operations moving into retail spaces, even though they're not typically having rows and rows of product for sale? They may be doing something slightly different. They may be working more as a workshop or design studio or a bit more of a local business. Is that something you're seeing changing? Is that a trend that's continuing?
It's going to happen, Jerry, isn't it? There's going to be so much vacant floor space within our town centres. Entrepreneurs will come in and find a use for that. And by no means are all shops going to be suitable for turning into flats. Nature abhors a vacuum, doesn't it? And pension funds and landlords and banks will want to actually get tenants in there. So there'll be concessionary deals which happen over the coming months and years, and entrepreneurs will take advantage of those. We're starting to see it happen. We're starting to see some different uses take up those shops. We're still at the very early stages though, but I'd expect to see our high streets quite different in 5 or 10 years' time. Not just a row of shops. You'll see some co-working space, medical space, community uses. Just hopefully a more eclectic lineup rather than the sort of homogeneous that we've had.
Absolutely. And just a little pet thing from my own point of view. One of the sectors that's obviously doing really well right now is industrial and storage sector, partly because of the internet, but the yields there are the complete opposite direction, aren't they? They're being suppressed. But do you think there is any potential for some retail space where it fits well, where there's reasonable transport connection, i.e. it's probably not bang on the high street, for those types of properties to maybe be used for some of those other sectors? Or do you see planning is just too difficult to change that?
Well, I think at the moment planning is going in the right way. It feels like it's being driven by central government. Who came out with this use classes change, use class E last year, and they're obviously driving the sort of retail to resi bandwagon which is coming along. So I think the sentiment is right for various other uses. I mean, to take our retail shops, the one that springs to mind is last mile logistics. Or even dark kitchens. Whether they're smack bang in the centre of our towns, I doubt. But on the edge of our towns, former supermarkets or former showrooms, you could see other exotic uses slipping into there in the future. I would dare say, yeah.
Okay. With the permitted development rights changing in England, do you feel that some people are potentially getting a little bit blinkered into looking specifically for projects to convert into resi? Do you think sometimes there's opportunities for running them as commercial being missed? And the other bit, I guess, of that whole equation is if lots and lots of space is converted to resi, there will, of course, then become a shrinking supply of retail workspace. So those levers are changing, aren't they? What's your thoughts on that?
Well, I think people got very excited and probably still are about the change from retail to resi. Just picking through the small print and looking at the detail, I'm not sure that the flexibility is there in terms of the use classes, but I'm not sure physically it's going to be as possible as people might have thought. There's various tests which have to be done. Obviously, property needs to be vacant for 3 months. Minimum space standards are being brought in and expect that to continue. Natural light is a big factor now, and just sort of various other encumbrances. So I suspect it won't be the rich picking ground that people initially jumped at. There'll still be some good business to be done there, but I'm not expecting to see a mass shrinkage of our high streets turning into random apartments here and there.
Yeah,
I would say, and also as they did with offices to resi, the local authorities will come in with their Article 4s, changing, sort of putting a bit of a break under that.
Yeah, there was other levers there, wasn't there?
Yeah.
Just back to the retail sector for a second, with your clients, are you finding those that are able to buy and take advantage of the opportunities right now have their own finance in place, i.e. they're not necessarily going to traditional lenders?
Yeah, that is really difficult. There is a two-tier market born out of the lack of finance. If you look at the small deals in the auction, the small retail deals, they're still selling well. £500,000, £1 million, £2 million. There's still a market there, but get much above that, and then people want to start introducing debt quite rightly, and then it tails out a bit, and the market above that, £5-10 million plus, was dominated by the institutions, and they're not there at all. So the small investor market, the guys with a bit of money in the bank and such like, who are cruising the auctions, are still paying fairly competitive prices, but above that, then debt is a real problem. What is going to help though is the yields are moving out to such a range, or such a sort of a soft basis, that the challenger banks which are coming in and offering finance as they do, but it's expensive finance. It's not like you're getting buy-to-lets. It's not 1 to 2%. It's 5, 6, 7%. But there will be a yield margin over and above that, because secondary yields are 10%. So you can pick up expensive debt from sort of exotic financiers, but you'll still get a margin because yields are so soft.
Great. Yeah. Okay. And again, the new investor, any other barriers you see for them getting in, and maybe ways of getting around those, Andrew? Because finance is obviously a big one that people bring up quite a lot as a barrier to entry, but there are ways around that, of course. But what other barriers have you had? Maybe some of the smaller investors that have started working with you, and then they've come against a wall they can't seem to get round.
I think the biggest barrier to entry for the smaller investors is just understanding the market. It is different. We're all used to buying and selling our own houses, aren't we? So
yeah, of course,
it's tangible doing residential deals. I tend to find that most people who come into the retail sector have got some education and do know. Have done their research, know what they're up against. The price of debt is more, but also the deposits you have to pay are more as well. There's a level of amortization, so it's just not interest only. There's a lack of clarity in the market as well. You can go to any estate agent and and pop in the front door for a chat, can't you? It's not quite the same.
Same in commercial, though.
They're squirreled away on the 6th floor of an office somewhere, aren't they? Most commercial agents.
Yeah. Well, we're talking specific about retail there, but just in general, you know, a new entrant to the commercial market, they may have some good experience in resi, but as you say, you come into the commercial market, some of the principles are the same, but the characters are different. And the approach can be different, and sometimes it just can be a bit overwhelming or underwhelming, depending on how you view it, to actually get into the sector. And if somebody was getting started in commercial, so not necessarily looking for retail, and I appreciate it totally depends on what their eventual goal is. But if they're building up a portfolio in resi and now they're looking for some more cash flowing assets and typically looking at commercial, what are the sort of things you'd maybe suggest to them where we are right now in this market? And if they were looking to get in, would they maybe best starting small, starting large, certain sector? What's your thoughts on newbies right now?
I would certainly try to engage with with a commercial agent, as we were speaking about a bit earlier, somebody you've got chemistry with, and somebody who will appreciate your business. I think you'll get the deals, but B, you'll find out hopefully where the problems may lay in a property. That they're there to advise you on the purchase, not just put the property in front of your computer and then walk away. They're there to give you some advice and tell you if the tenant's going to stay there, or what rents are doing in the town. So try and engage with a few commercial agents. I think in commercial a lot more can go wrong than in residential. You've got typically longer voids. If a tenant goes in commercial, in residential you should be able to let it within a matter of weeks. It's not always the same in commercial. It can take 6 months to let a shop, even a year, and you've got rent free to give as well. You might need to spend money to redesign the shop. So I think more can go wrong in my view. So yeah, align yourself to a couple of commercial agents as you're getting going, and just pick up their advice really.
Yeah,
the fees aren't enormous.
Try and get educated. Yeah. Okay.
Yeah.
So I've got two last questions, both in slightly different areas, but one's about EPC. And the other one's about a little slight tweak on the retail thing. So just with EPC certificates, Andrew, the bar is rising all the time, right? Yeah. And I don't think anyone sees that changing. And what we're talking about here is just where there is a line that says if your building is below this EPC certificate rating, you may not be able to rent it out unless you do X, Y, and Z. So what's your current view on that? Are you advising certain investors to watch out for that, or are there ways that they can mitigate that as a problem if they're looking at some older properties? It's
the way the world's going. We're all becoming more sustainable and environmentally aware. It's a one-way ticket, isn't it? And if you think times are tough now, you can bet in 5 or 10 years' time that the restrictions will be more restrictive. Yeah. I would err on the side of caution especially if you're buying a commercial. You've got to look at your exit, haven't you? If you're buying a commercial property with a good tenant and you expect them to be there in the long term, then perhaps the EPC rating isn't quite the issue. But if you buy a sort of an older property now, you expect to go through a few tenants, and you think you might sell it in a handful of years' time, then you've got to sort of think that during that journey, you're probably going to have to put in some insulation, worry about the heating, worry about who you're going to sell it to in a number of years' time, because purchasers are all being more stringent on that, and they won't pick up anything unless it's discounted or reflected in the price that is going to have potential EPC problem. Yeah. So it's about future proofing, really.
And at the moment, what's your view on workarounds for the EPCs? Because obviously certain older buildings right now, you can get them to a certain point, or you have your plan in place for the improvements you're going to make, but ultimately those buildings will only get to a certain level. Do you think that eventually they're really going to tighten the screw and make it so that it becomes actually quite difficult, because that's almost going to be back to front, isn't it? We're actually getting to a point where you may not be able to let out a building, so you're going to have to change it for a new building, which defeats the purpose, you would argue.
Yes. Yeah, that's a good question, actually, isn't it? It's like secondhand, old cars at the moment, isn't it? Chucking out diesel. The old
You've got
cars,
to build a whole new car, haven't you? So,
yeah. You'll be knocking on Elon Musk's door for electric vehicles soon, won't you? But the old cars seem to be protected in that they've, what can you do about them? There's nothing you can do to really improve them without spending a whole lot of money. So they seem to get a pink ticket. And I'm wondering if it's going to be the same for really old property where it's so old and so impractical or not cost effective to to put the insulation in or whatever it might be to bring it up to modern standard that it might get a pass. It's like these old coaching inns which are being converted into nice pubs to residential, with thatched roofs and all that. What's the future for those? Are they going to be heavily scrutinised? I mean, I suspect there'll be some properties which will get a free pass, but
I think so. I mean, listed is obviously a good example, that sort of thing you're talking about there. The challenge I have with EPC certificates is that, as an example, we have quite a few biomass boilers in our properties, but EPC doesn't take account, and solar, EPCs don't take account of the overall impact of the building. What they take account of is just the use of energy. But if you're producing a lot of that energy yourself, that's not always reflected in the EPC. And I think that really needs to change. I don't know, do you agree with that? Or it's not quite as holistic as it maybe should be?
Yeah, we're sort of wandering into a territory where the investment agent probably would pass the funds over to a requisite professional in that particular.
That's okay. You've got the small print out there, Andrew.
We're often accused of being jack of all trades and master of none. I'm fairly happy with that moniker. When it gets too complicated, we've got go-to people.
The last one was about retail again, just dipping back in there. At the moment, we have serviced residential, we've got serviced offices, there's serviced warehousing. Is there an opportunity for serviced retail? Where, you could argue that a department store or a shopping centre is kind of serviced, but it's slightly different, isn't it? It's not a license to occupy, it's a lease, or it's in a department store, it's a concession. But is there actually an opportunity maybe for more pop-up shop space within a collective that is more serviced?
Yes, I think this is something really I find quite exciting in a sort of a nerdy kind of way. I think it's there's definitely going to be a clamour for independent retailers to populate our high streets over the coming years, and barriers to entry rather, get my words out, has been a problem in terms of shop fit, taking long leases. How do you do it? There's so many complications for retailer over and above just selling their product. So if there is that ability for them just to sort of have in a plug and play fashion a retail unit where they can suck it and see for 1, 3, 5, 6 months or whatever, and all they have to do then is concentrate on selling, then I think that's great news. I mean, the one who's sprung up and currently I think does it best is Box Park in London. They've got Shoreditch, Croydon, and Wembley. I actually found them their Wembley site, so it's quite close to my heart. But so they have these shipping containers, and they lease them out for anything from a week to a year, or possibly longer nowadays. And they're able to sort of like curate the tenant mix. So if something doesn't work, then they'll let them go and they'll bring somebody else in. So they carefully balance the tenant mix and create a really workable ecosystem in Box Park. But what else they do, which is where all the department stores I think failed in the end, possibly apart from Selfridges, is it was such a sterile environment in those department stores. You'd find a shoe shop next to a handbag, and maybe somebody was playing a bit of music over the sound system, but apart from that, it was bloody dull, wasn't it?
Yeah.
And I think people just want more from their retail now. So I can definitely see some sort of service retail environment in our department stores, but well curated by a person. It doesn't require a big faceless pension fund or big property company without the common touch, just dropping these retailers in and hoping it to work. There's got to be some there.
It's got to be somebody in there managing and curating, like you say. That the challenge, of course, is it's a different model, and financing it will be challenging. So you're going to have some people with an appetite for risk for that. But I personally think that model could, and you've just reinforced that model could be really interesting. It could work well.
Yeah, well, I think now's the time to do it, because a lot of these department stores are incapable of being used for much else. So you're going to have some pretty willing landlords who will listen to some crazy out there ideas.
Yeah,
because they've got no other hope really. So
let's just keep that one under our hat, Andrew. We won't tell anyone about that one.
Let's edit this bit out. Yeah.
Great. Okay, Andrew, thank you so much for joining us. I'm really conscious that some people will want to actually reach out to you. So can you maybe just tell us a couple of places they could maybe find you? I know you're on LinkedIn. Where can people look for you?
Yeah, thank you, Jerry. So my commercial agency, tandemrealestate.co.uk.
Great.
Yeah, and my commercial conversion platform, which we set up, credoliving.co.uk. So yeah, find yourselves on those two websites, and my contact details will be there. But like everybody nowadays, I seem to be spending a bit of time on Clubhouse and trying to keep it useful at Instagram as well.
That's right. That's right. Well, I mean, it's a great platform, and of course, the fact that it's connected to Instagram, I think, is one of the genius things about it, because then people can get to you across multiple platforms, can't they? And you can communicate with them and all that stuff. We will, of course, put your details, Andrew, in the show notes so people can pick those up there and come to you if they need to. I really appreciate your time. Thanks for talking on such a wide range of aspects. I wanted to get into the retail thing, but the opportunity of having you here to discuss some of those other things couldn't be passed.
I'm sorry I'm not the expert you might think I was an EPC, so I'll just have to brush up that skill.
Hey, that's fine, that's fine. Do you know what? At the end of the day, it's a moving thing, isn't it? And they're not going to be able to solve it. It's not one thing fits all. So there's going to be ramifications as they work through that on things they weren't expecting.
Yeah,
like the one about what do you do with buildings? Do they finally become redundant or not? And I think there'll be a workaround. Anyway, thanks very much for your time, Andrew. We'll look forward to maybe bringing you on again in the future once you have worked a bit more on EPCs.
I'll let you know when I'm an expert.
Appreciate it. Thanks, Andrew.